What's up, traders? Back again, Overflow Nexus, giving you the best tips and tricks in the market. And you guys gotta understand, when it comes to trading any in any financial market, you have to have a trading plan. And if you don't have a trading plan and understand what the market is doing, you're always going to lose money. You're always going to fail. So I have 3 tricks today that I want to help you if you are a struggling trader on entering the market. I want to help you get better at entering the market and look at places where to enter. I always have this one rule, and it's very crucial. Always have a level, but we're going to get into that. The first thing that you really want to dissect in the market is, where is the market at and what is the trend? So if you're looking for the trend, you want to know if the trend is bearish, you want to know if the trend is bullish, or you want to know if the trend is just consolidating. And so you have ideas where the market is going to go. So that's the first step. So you want to see if we're bullish, we're bearish, or consolidating. So those are the first things that you want to identify. The second thing that you want to know is, where's the price at? Is it the price at a level, or is it floating? And I'll get into that in when we get on the charts, so I can show you some live examples of what to look for when it comes to looking for levels. All right, so it's priced at a level, and what I mean by level, is it at a level of supports or resistance? So types of support and resistance would be your EMAs, your fractals. If you trade the Ichimoku style like I do, you will be looking at the Kumo, the Tenkan-sen, the Kijun-sen, and also another one to throw in their order blocks. Those are other levels of support and resistance, or supply and demand zones as well. Those are places that you want to take your trades at. Look for an opportunity to potentially take a trade. If you don't have none of these levels, you do not have a trade. That's a majority of why most traders lose in the market, because they're not trading at a level. They're trading simply just to trade. They're trading just because they feel like the market's going to do something, and they jump in just because they think, hey, I see the market's going up, but it hits it goes up for a minute and then it drops to the other direction. So this is another thing that you have to take into consideration. Criteria number 3, and this is very important. This is why you should enter your trades to begin with. You have to have a level, and then you have to have either price action, volume, or a breakout and a retest. So if you have none of these criterias, especially number 2, you do not have a trade to begin with. It all starts with having a level. Once you have a level, then you have a trade, but you have to take your time and dissect the market for what it is really trying to tell you at that time. All right, so we're going to go ahead and get on the chart. We're already on the chart really, but boom. So let's go ahead, move this out the way so we could really get into details on the trades like this. I could delete that now because y'all should have notes on that, and we could go back to it if y'all want. But hey, I really want y'all to really dissect this, really understand what the market is saying. So one thing I want to show you guys, let me show you here. Right here, we're going to focus on this spot, because this is an area where a lot of people get tricked in the market, is because the market is neither bullish nor bearish. And I want to show you how to trade a market like this. And this is where a lot of people would get in trouble. So what I personally like to do, let me take Ichimoku off. So what I like to personally do in markets like this, I like to put my a trend line, not a trend line, a horizontal ray, or just a regular horizontal line at the body of the candle, right? So you see here I have it at the body of the candle. And so I like to put it at the bottom in the top of the body of the candle, where price is usually touching multiple times. So now you can clearly see that the market is in a range. It's neither moving up or down, it's just moving sideways, which is technically it's still moving up and down, because if you go to a smaller time frame, you can see the market is moving up and down on that time frame. We'll get into that in a minute. But you see here on the hour, it's moving sideways. So what I like to do, if I see multiple rejections on either the top or the bottom, what I like to do for this particular type of style of trading, I like to use volume for this type of style. So what I do here, I have this indicator called the CVO. On other platforms, it's called the CVD, and we'll get into that. But I want to show you something. All right, let's go back to the chart. Let's go back to this area. So what this is showing me And I'll move some stuff. I don't want to confuse anybody because I don't want any confusion here. I want to show you guys how I'm looking at this. So here, this is showing me that buyers, sellers are in, buyers and sellers are both in this market. This is what it's telling me. Both buyers and sellers are in this market. And if you want to learn more about how to use the CVO, definitely subscribe and like this channel. Consider being a member of the channel because I do have some member content only that I have a course on here that I do have people take that and for that are members of this channel as well. So you could check out being a member to this channel. But that being said, this is showing me that there are buyers and sellers in the market, and it's pretty even. As you see here on the chart, that's what it's showing us. But this is what it's saying here. We see that at this point, and I'm going to show you a comparison. Between these 2 points, it was showing that there were sellers coming in at this point. Then we see that it was showing buyers are slowly coming into the market. Now, when you look at the chart at this point, you could see that. However, it's still ranging within this, within the top and the bottom of this wick, of the body of this candle. So what we want to see here for a breakout, we want to see, or a trade opportunity, you want to see one of these bars increase higher than the previous bar, whether that be a bullish bar or a bearish bar. Here, when we got to the top, notice how we did not break this top here. So we know once we got here, we know that we're looking for a short at resistance. You always think short at resistance. That's a level. So this will be a body resistance of the candle. All right, you're still resisting at this point. You see how the market's making wicks. So you're thinking at this level, look for a potential short. So if you go to a smaller time frame, and I'll get into multiple time frame analysis on this, but if you go to a smaller time frame, say like the 15-minute time frame, let's go back real quick. I want to make sure that I have the right spot. All right, perfect. So I want to show you this real quick. Notice here how volume was increasing, and then all of a sudden, look what's happening. At this bar, volume decreased, and we have sellers entering in the market now. Notice here, boom, I have a level. That's the first thing you must have a level. Increase in volume, price action, bearish engulfing candle. Boom, look what the market's doing. All right. So there we had our breakout. Look what happened, came to this fractal level. If you have missed that trade, you have another opportunity right here. Boom. And I want to make sure y'all get this because this is very important to traders. You have to have a level before you enter the trade. Notice here how we came back up, came to this fractal level, and it's a level. It's just a very minuscule level. It's very small. People do not take these levels into account. So we came back to this level, had a touch here. See, we're still having selling pressure coming into this market, and we rejected with the wicks at this level. So this could be our second entry point. You could enter here for your trade short. Got rejection, and we had a tweezer top right here anyway. So boom, you see the market is decreasing. It did show buyers were trying to come in, but look what's happening. It's not aligning with what's being said on the chart. So we know sellers are about to be heavily involved in this market. And then we play it. You see what's going on. Let's drag this over. You see sellers took over. We could not break this range here. And you see sellers took over dominantly. So this is how you want to take your trades. You want to look for your trades like this. You want to look for opportunities that are going to be at levels of support and resistance. If you do not have one of those levels that I showed you earlier, whether that be a fractal, whether that be a Kumo, whether that be a Tinkerson, Kijisen, or just a regular EMA, if you do not have those levels, you do not have a trade. And this is why everybody is taking L's in the trade, because they're not patient enough to wait for price to get at a level. Let me show you an example of a floating market. So right here would be where the price is just floating, right? Because we're not really at a level of support or resistance. Unless you draw a trend line like this or a horizontal line like this, then yeah, you have a level here. But you want to make sure if you're trading at that level, you want to make sure if you're trading at a floating market, you can't just trade it just because you feel like it. You want to make sure you put make a level of support and resistance there, turn it into a support and resistance like how it is here, then look for your opportunity to go long or short. We know at support and resistance levels, we're either going to bounce. In this case, it's support. We know we're going to either bounce to the upside, like we did here. Let me fix that. We're either going to bounce to the upside or we're going to break down to the downside at that point. Excuse that. That's ugly, but hey, y'all get the point. But look, we're either going to go to the upside or the downside. And look what happened. We came back up. We have a level. Once you establish your level, look at price action. We had a shooting star right here. That's your entry right here. Stop loss above that level or wherever you want to put it. But boom, next candle, you got a lot of profit. So look what happened. You have to have a level before you take a trade. Always have a level. This is why you're struggling to take a trade. And wow, look at that alert on US 30. That's amazing at this present time. But like I've been saying, if you do not have a level, you do not have a trade. This is why traders struggle in the market, because they are looking for opportunities that are not there, and they try to create something because they're chasing the bag and being greedy. So that being said, you guys, be blessed in Jesus' name. I hope this video blessed you, and make sure you use this trading to your advantage. Use these the criteria of today's teachings to your advantage, because you could definitely make some money in the market. Definitely subscribe, like this video, and I appreciate it. I do live streams, and if you want to be a part of the Discord, check out the Discord group. I put in trades in there for students, and I also talk about the financial market, what's going on in the market. So that being said, love you guys. Be blessed in Jesus' name, and peace.